If listing inventory pulls back, we are then going to drift back into a seller's market. It'll lead to tighter conditions, and which will more than likely lead to some upwards pressure on price. As soon as rates start to drop, we are likely going to see many more buyers enter the market, start to put some of that upwards pressure on price. So CO3, it's a neighborhood, central Toronto, dominated by detached homes. It sits right next to Forest Hill and Lawrence Park, then CO4, which are some of the priciest neighborhoods in the city of Toronto, some of the priciest neighborhoods in Canada. CO3 is 25% less expensive than CO4. That screams under the radar to me. If you are looking for that kind of entry-level luxury product, CO3 is the most underrated neighborhood in Canada, maybe North America, for your entry-level luxury real estate. Welcome back to the beat of the city, the pulse of the streets, your go-to source for everything real estate that's hidden in plain sight. I'm your host, Joshua Jean-Baptiste, ready to guide you through the opportunities and the insights that await in the world of real estate. We are going to delve into the numbers from the most recent market stats update from January 2024. We are going to digest the data and the numbers to present to you what's really happening in the Toronto real estate market and in some of the under-the-radar neighborhoods that we target on this channel. So buckle up, let's jump right into this. So the numbers from January 2024, the first month of 2024, brought us some really interesting numbers. The market is experiencing some tighter market conditions. The market conditions are tighter than they have been for the past few months, but some of the more advanced metrics might show that the market is still, in my opinion, in a buyer's market territory. Buyer's market territory meaning that buyers have the upper hand right now in the market when it comes to negotiating price. There's still a lot of supply on the market, so things kind of favor buyers in this marketplace. Now, that has changed a little bit over the last few months, which we're going to get into in just 1 second. So let's go over the numbers for the overall market in the city of Toronto. These are the numbers you've seen all over the place, but let's go over them right now so it kind of gives us some context now when we kind of delve into the nitty-gritty of the Toronto real estate market. So for sales, we started off the month with 4,223 sales for the month of January, which is a 37% change over the amount of sales we saw in January of last year, which was 3,083 sales in January. Now, last year, January, inventory was quite a bit lower, so there just wasn't a lot. There weren't a lot of homes for people to buy last January. It was just a tighter market on the listing side. So when we talk about listings, new listings were up 6.1%. Active listings were also up 8.5%. Now, these are key metrics. When we hear the Toronto Real Estate Board and some of the media say how things have gotten tighter, yes, they've gotten tighter, but they're based on the amount of listings that we have on the market. It's not as tight as they would make it appear to be. So that then leads us to price. Average price was actually down over last year by about 1%. And these are the average numbers for the overall GTA. Later, we are going to talk about the HPI, which is the seasonally adjusted numbers. Those numbers kind of reflect about the same as well. And then when we look at days on market, we're sitting at about 37 days. So it takes about 37 days for the average listing to sell, and the average property days on market, which includes when properties are listed, terminated, and then relisted again. So we're looking at the overall average time about 54 days for a property to sell in the GTA. So let's get into those City of Toronto numbers specifically. Sales numbers are a little bit different, right? We are looking at sales of detached houses year over year up 7.5%, semis up 26%, townhouses up 42%, and condos up 46% over last year. So a lot more condos are selling this year than last year. Actually, almost 50% change in the amount of condo sales this year versus last year. Now, with the added sales, it hasn't really affected price because condo prices are fairly flat. They're up 0.1% year over year. So while we're seeing more sales, there's a lot more inventory in condos. So it's just people snapping up some of that inventory that has been stagnating on the market on the condo side. We go through the prices. So detached prices are up 5.7% over last year. Semis up 4.3%. Townhouses down 8.8% over last year. Right. So those are all the macro numbers for the city of Toronto. If you follow our podcast, you follow our market updates, we like to look at some of the more advanced metrics to get a read on where the market's at right now and where it's likely headed as we move further into 2024. So if you watch, you know the numbers we like to talk about: MOI, months of inventory, and then SNLR, sales to new listings ratio. So these two metrics give us a good read on where the market's at right now and where it's likely headed. So these two metrics kind of give you a gauge of whether we're in a buyer's market, a balanced market, or a seller's market. So when we look at those numbers for the overall city of Toronto, we are going to look specifically just at the city of Toronto for these numbers. Months of inventory is sitting at about 2.7 right now. So again, for those who haven't watched before, it would take about 2.7 months to sell off all of the inventory we currently have right now on the market in the city of Toronto. A balanced market is at 2.5. So right now we are still leaning a little bit in towards a buyer's market because 2.5 months is kind of like the bellwether for balanced. We're slightly above that. So what that means is that if we do see a bit of an influx of inventory hitting into the spring, we are firmly going to be in a buyer's market. However, if listing inventory pulls back, we are then going to drift back into a seller's market. It'll lead to tighter conditions, and which will more than likely lead to some upwards pressure on price. Now, when we look at the other advanced metric of sales to new listings ratio, we're sitting at about 45%. Balanced market is at 50. So again, this metric is also pointing us more towards a buyer's market. When we looked at busy markets from the past, especially back in 2021, for example, we were seeing sales to new listings ratio up in the 70% plus range. So that means 70+% of those new listings that were hitting the market were selling within that given period of time. Right now we're at 45%, so below that 50% threshold of listings selling. So again, when we look at both of these two metrics, combine them together, some could maybe argue we're in a balanced market. Not to be pessimistic, I'm kind of leaning more towards we're still slightly in a buyer's market. Some of these numbers are also driven by the condo inventory that's on the market, because some people who have been looking for houses, especially some of my clients that are looking specifically for freehold homes, they would probably be screaming at me, "Hey Josh, you haven't been sending me many listings recently," and that's true. On the freehold side, we are probably more towards a balanced, maybe slightly seller's market. However, from a macro perspective, we are in a buyer's market. So then when we break it down and we look at some of the different sectors of the city, you're going to get a better understanding of kind of where things are at overall. So if we look at the east versus west versus central neighborhoods of Toronto, in the east end, we are seeing things very much in seller's market territory. Their months of inventory is sitting at about 1.8 months. Sales to new listings ratio, it's always a mouthful, is sitting at 52%. When we look at the west end, months of inventory, now my west end is a lot more balanced. They're sitting right at 2.5 months of inventory. Sales to new listings ratio is at 47%. Now, when we look at the central zone, so right in the middle of the city, months of inventory is sitting at 3.2 months. So very much buyer's market territory. Sales to new listings ratio, 41%. So only 41% of new listings are selling. So those numbers are likely getting influenced by the condo market. The condo market is very, very well supplied right now. there is a massive opportunity for buyers looking for a condo right now in the city of Toronto. So if I were to have a crystal ball, based on the sales numbers we saw from last month, again, condos were up 46% in the number of sales versus how well the market is currently supplied. I think we actually probably have a finite amount of time based on also where the sale, like the average price is at versus some of the peaks we've seen. We have a finite amount of time for this buyer's market, for this current condo buyer's market. I think we probably have maybe 3, it could stretch out to 6 months of this kind of depressed condo market, because as soon as rates start to drop, we are likely going to see many more buyers enter the market, start to put some of that upwards pressure on price. That's it for the overall macro numbers in the city of Toronto. You are watching the Under the Radar Real Estate Podcast. A lot of you want to get into the numbers from the under the radar neighborhoods that we track month over month since we started this YouTube channel. So let's get into those numbers. So when we look at the neighborhoods of CO3, W03, and W04, which are the 3 under the radar neighborhoods that we like to target on this channel, let's just dive right into the overall sale numbers. CO3, we saw an average price of these are, again, before I get into it, these are the HPI numbers. I personally like to look at the HPI, which are the composite numbers, which again are the seasonally adjusted numbers. The numbers that we talked about before, those were the overall average. I like to look at the more accurate seasonally adjusted numbers. Let me back up 1 second. For the seasonally adjusted numbers for the city of Toronto, we are sitting at about $1,050,000. Which represents about a 1.17% decrease over last year. When we look at CO3, we are sitting at 1.567 million in CO3. So some of you, whenever I bring up CO3, I'm sure some of you are screaming like, that doesn't really seem that under the radar. So CO3, it's a neighborhood, central Toronto, dominated by detached homes, right? So the price point is going to be a little bit higher. The reason why it's an under the radar neighborhood, for those of you who are new to this channel, it sits right next to Forest Hill and Lawrence Park, which are some of the priciest neighborhoods in the city of Toronto, some of the priciest neighborhoods in Canada. So when we look at CO3 versus CO4, just to the north, separated by a street. So CO3 is on the south side of Eglinton, CO4 is on the north side of Eglinton. When we get into CO4, the average price of a home in CO4 is $2.1 million. So CO3 is 25% less expensive than CO4. That screams under the radar to me. So if you are looking for that kind of entry-level luxury product, CO3 is the most underrated neighborhood in Canada, maybe North America, for your entry-level luxury real estate. Now, let's move on to our other 2 neighborhoods that we like to target on this channel, W03 and W04. So W03 and W04 kind of encapsulate that Eglinton West through to Weston corridor. The neighborhoods that we talk about all the time as being the next neighborhoods that are going to see a massive surge in value in the years to come. And its number one driver is transit. Once the new subway opens along the Eglinton line, these neighborhoods are going to explode with growth. So when we look at the numbers right now, though, there is some massive opportunity. So the average in W03 is $941,000 versus the average in the city of Toronto at, again, just over $1 million at $1,050,000. It represents a 10% discount over the overall city of Toronto. In W04, which kind of pushes us a little bit further north, Weston, Briar Hill, some of these neighborhoods, we're looking at $877,000 as an average, which is 16% below the overall average in the city of Toronto. That is just screaming opportunity. Those of you watching this right now, give us a call, or you can send us an email, hello@realestateundertheradar.com. We'd be more than happy to speak with you if you're interested in buying one of these 3 neighborhoods, because again, the opportunity is now. We have a window. I mean, hopefully it's only 6 to 7 months when this subway opens. Those of you who live in Toronto know the pain of this subway line, but once it opens, a lot of you will likely FOMO into this neighborhood, realizing, oh snap, it is now well served by rapid transit. I can get downtown in less than 20 minutes. So get it now before that happens and you won't experience that FOMO. All right, so that's it for our show today. Thanks for watching. We went over the market trends, both in the city of Toronto and the under the radar neighborhoods. So if you're looking to buy, sell, or even rent in some of those under the radar neighborhoods or anywhere in the city of Toronto, we would be more than happy to be your real estate resource for any of that. So thanks for watching. Don't forget to like and subscribe if you like this podcast or if you like any of our content. It really helps us out. We want to get the word out to more people to really start paying attention to some of the hidden gems and less talked about things within real estate. So that's it. That's our show. So remember, in real estate as in life, the next big thing might just be where you least expect it. Peace out.